Hello everyone, myself Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the earnings report of the Target Corporation, which released its fourth quarter earnings for the fiscal year 2023, which are seeing a substantial rise. There has been almost more than 50 percentage point growth in its net income, and accordingly the share price has also responded with investors cheering its earning report and pushing the stock price higher. And I think this trajectory is likely to hold in near future as the rebound in the economy is continuing, and we are seeing, as we have seen earlier also, for the other and bigger retailers like Walmart and Amazon have also shown substantial increase in their revenues and the net profit. Target being a smaller player, it has been able to do better than them in percentage terms. Though if we look at the net figures are of course as expected on the lower side, but the growth which has come on the smaller base has helped Target grow more than other its competitor, and that is reflected in its share price valuations as well, which are inching higher and higher for last couple of weeks. Maybe even if we go back in time to the October November of 2023, from there on it has seen a formation of higher highs and higher lows, and we are yet to see any signs of reversal. So as long as that holds, we can keep continuing to look for the opportunities to buy, go long in trade and investing possibilities. For fundamental review, we will first take a look on its quarterly report, which was released last week. And as I said in introductory remark, the company has done remarkably well. These are the highlights for the fourth quarter of 2023. This is the biggest factor that its net income and EPS has grown 57.6% to US dollar 2.98, and it has seen growth in all the three key segments: in-store pickup, drive-up, and shipping. Its growth is remarkable. The total sales have increased in double digits. For better understanding of its earnings, we will have to look at its quarterly income statement. This is the consolidated statement of operation. The net sales were at US dollar 31.46 billion, which is just 1.6 percentage point higher. So if you look at this top line, the growth is not that much. The growth is simply in low single digits. But then if you look at its net income, that is phenomenal with more than 50 percentage point growth. That shows that the company has gotten its act together to make it operationally efficient, to make its cost of sales decline to the possible extent, and also it has cut cost wherever possible. So that has given it a higher operating margin, resulting in net income rising substantially in comparison to the growth which it has seen in its revenue. So the story is of efficiency, the company getting better at its job. That's what you can say. For the financial position, there is no concern regarding its going concern status. The company is well placed to continue its operations. And if you consider the cash flows, the cash generated by operating activity has more than doubled in this quarter ended February 3rd, 2024. This is for the 12 months ended. So pardon me, it's not for the quarter. It's the cash flow statement is for the 12 months ended February 3rd, 2024. And for this period, the cash from the operating activity is now at $8.6 billion. Out of that, the company used 4.7 billion for the investing activity, and for the financing activity, there is not much of a change for this time. The company has spent $2.28 billion in the financing activity, and the major chunk of that went to the dividend payment. For it, company spent more than $2 billion, which is around 200 million higher in comparison to what it was paying a year back. And as a result of this lower use of cash in investing activity and higher cash flow from the operating activity, the company is sitting on a cash pile of $1.5 billion. So its net cash position has increased from $2.2 billion at the start of the year to $3.8 billion at the end of the period. Now, if we compare it to the prior year's performance, in that there was decline of $3.6 billion. There was decline of $3.6 billion, and here we are seeing a turnaround that is also reflected in the performance of its share price, as the investors are cheering up this turnaround, the high efficiency and better management of its cash and cash equivalents. Now, for us to get a idea of the emerging trading opportunity, trade and investing opportunity, we also have to consider its stock price performance over recent weeks, recent months, depending on your time horizon. You will have to consider different time periods. First, we consider these short-term price trajectory using the hourly as the candlestick time frame. In it, you can see there was this substantial growth after the release of its quarterly statement, with these gains of around 15 percentage point from the closing price of the prior day to over next two sessions. And from there onward, there has been some correction. You can't really say that the target has given up its gains. It is simply a part of consolidation. Its trajectory still remains bullish, and after a session or two, maybe if it starts to hold and doesn't really decline much below the current levels, we might even think about going for a fresh long trade in these target shares. But for that, the first thing, the requirement is going to be that these current price levels should hold, because this is where the share price started immediately after the release of earnings, and that is going to make it a statistically as well as psychologically important level for the target stock price performance over the next few days, next few sessions. So if the stock price holds, then investors and traders will get excited about the possibility of a fresh move on the higher side, and that can give impetus to the shares of the target to climb again. So watch out for how things shape up over next few sessions, and then you will get a good idea of when to enter and exit from a possible trading opportunity. If we expand our time horizon to make it medium term, we will have to rely on day as being our candlestick time frame. And as I said in my introductory remarks as well, particularly after this November month, the formation has been of higher highs and higher lows. The growth has been around 70 percentage point from this low to this recent high, and it has been achieved just in 4 to 5 months. So this kind of jump would be quite good for any investor. If you had gone in for any opportunity to invest and trade at that point in time, you would be sitting on a lot of appreciation of your capital. And even now, on these elevated levels, the formation is still conducive for the buy on dip strategy. And as the target has seen its net income jump, and also it is expecting the revenue to keep rising for the current fiscal as well, we can be fairly confident of the possibility of target holding its trajectory and continuing to move higher. But then the question arises whether right now is the time to get involved, or we should be patient with the price formation. And I think from my perspective, the answer is we need to adopt a patient approach here, as there has been substantial price rise in the recent times and the price now seems to be going sideways. We will do well to hold our horses and wait it out for this consolidation to play out over next few weeks. Maybe by the second half of April we might have a better opportunity. So my advice is that let it consolidate first, and then if it holds the price level and doesn't really dip much below 150, which is also closer to the prior swing high prior to the release of its quarterly statement, we can go with a confident trading perspective for a long trade and expect the target to start a fresh rally and in course of time rise beyond this immediate swing high. If you are objective is to trade and invest from the longer term perspective, then the price formation needs to be expanded to include larger time frame. And for the target, last couple of years haven't been that good in terms of the rise in valuations. It was at its recent peak in 2021 2022, but from there onwards it continued to decline, and then on these lower levels it started to find support closer to 100, where it spent almost 2 quarters where the price moves were quite shallow. It wasn't really dipping much. It had bearish undertone, but it was moving in a very narrow range. And after consolidating closer to this 100, it has found new growth energy, and it has now seemingly reversed its course from bearish to a possibility of starting on a bullish trajectory. Even now, we can't really say that its trajectory has to totally reverse. Maybe that is too sooner to say. But if it continues and doesn't really dip much over next few quarters, then maybe by the second half of this year, we can even think about investing in it from the longer term time frame for a couple of years. But that is too soon at the current levels, and we will have to keep it under watch and go for the trade and investing opportunity in the long term as and when it shows the signs of stabilizing, and formation also turns of higher highs and higher lows. So that's my take on the price formation of the target corporation from the short term, medium term, as well as long term perspective. Here, there's a interesting bet. There has been growth of late, but maybe we will have to wait it out further. And in course of time, I feel we are likely to find good opportunity with excellent risk reward ratio. Now it's time for me to sign off for the day. If you have found the session informative and useful for your trading and investing decision, do write to me the feedback and also like and subscribe to the channel. You will have equally interesting sessions by me as well as other hosts on this platform, which you can access by subscribing to the channel. See you next time around with equally interesting company to work with.